Listen up, investors. The world just got a whole lot riskier. Israel and Hezbollah are at it again, and this time, it's serious. Rockets are flying, bombs are dropping, and the whole Middle East is on edge. This conflict is sending shockwaves through the global economy. Oil prices are going through the roof, gold is skyrocketing. The stock market is a roller coaster, but don't panic, that's what the other guys want you to do. We're going to stay calm, stay informed, and make smart investment decisions. What happens in the Middle East doesn't stay in the Middle East. So buckle up, investors, because we're in for a wild ride. When the bullets start flying, guess who makes money? That's right, the defense contractors. With tensions escalating in the Middle East, governments around the world are scrambling to beef up their military capabilities. And that means big bucks for the companies that make the tanks, planes, and missiles. We're talking about companies like Northrop Grumman, one of the world's leading defense contractors. And with this latest conflict, their stock is poised to take off. Smaller, more specialized defense companies are also going to see a surge in demand. Companies that make drones, surveillance equipment, and cyber warfare technology are going to be raking in the dough. Do your research, identify the companies with the strongest fundamentals, and invest for the long term. Remember what I said about the Middle East affecting everyone? Well, it's happening again, and the impact is massive. Well, nothing proves that more than the price of oil. When tensions rise in this region, oil prices follow suit, climbing higher and higher. This region is like the heart of global energy production, and when there's trouble in paradise, the whole world feels the pain at the pump. It's a ripple effect that touches every corner of the globe. With this Israel-Hezbollah conflict throwing everything into disarray, oil prices are shooting up faster than a rocket. The instability is causing a surge that affects not just oil, but the entire energy market. And you know what that means? Big profits for the energy companies. Their stock prices are soaring as they capitalize on the rising demand and prices. One such company is Chevron, a true titan of the energy industry. They are positioned to make significant gains during these turbulent times. They're involved in everything from oil exploration and production to refining and marketing. Their comprehensive operations ensure they benefit at every stage of the process. But it's not just the oil giants that are going to cash in. Smaller energy companies are also seeing a boost, riding the wave of increased prices and demand. Companies involved in renewable energy are also going to benefit as countries look for ways to reduce their dependence on foreign oil. The push for sustainable energy solutions is stronger than ever, creating opportunities across the sector. When the world's going crazy, investors run for the hills. And by hills, I mean safe haven assets like gold. This precious metal has been a store of value for centuries, and in times of uncertainty, its shine only gets brighter. Why is gold such a safe bet in times like these? Because it's a tangible asset that's not subject to the whims of governments or central banks. It doesn't matter if the stock market crashes or the dollar collapses, gold will always hold its value. But a more practical way to invest in gold is through ETFs like the Spider Gold Trust ETF. This ETF tracks the price of gold, so you can easily add this safe haven asset to your portfolio. Travel takes a hit. Airlines and hotels. Feel the pinch. Remember those summer vacation plans you had? Well, this Israel-Hezbollah conflict might throw a wrench in them. When tensions flare up in a region, the first thing to go is tourism. Airlines are already canceling flights to the region, and hotels are seeing a wave of cancellations. And it's not just the Middle East that's being affected. People are getting nervous about traveling anywhere, which is bad news for the entire travel industry. As for investing in the travel sector, this might not be the best time to jump in. Airline and hotel stocks are getting hammered right now, and it's unclear when they'll recover. Once the dust settles, there could be some great buying opportunities. Section 6. Profiting from volatility. Top stock picks for uncertain times. Don't let the doom and gloom headlines scare you away from the market entirely. It's easy to feel overwhelmed by the constant barrage of negative news. Yes, these are uncertain times, but uncertainty also breeds opportunity. With the right strategy, you can navigate through the chaos and come out ahead. While some sectors crumble under pressure, others thrive amidst the chaos. It's all about identifying which industries are resilient and have the potential for growth. We've already talked about defense and energy, two sectors poised for significant growth in the current climate. These sectors are often seen as safe havens during turbulent times, but there are other smart plays to consider as well. Remember, diversification is key. Spreading your investments across various sectors can help mitigate risks. You don't want to put all your eggs in one basket, especially when the ground is shaky. Diversifying your portfolio can provide a safety net. iShares US Aerospace and Defense ETF, ITA. This ETF offers broad exposure to the booming defense sector. It's a solid choice for those looking to capitalize on increased defense spending. Barrick Gold. Investing in a leading gold mining company like Barrick Gold provides leveraged exposure to rising gold prices. Gold is often considered a safe haven asset. Remember, these are just starting points. Use them as a foundation to build your own strategy. Do your own research, understand the risks involved, and don't invest more than you can afford to lose. It's crucial to stay informed and make educated decisions. Section 7. Don't put all your eggs in one basket. Diversification is key. Let's face it, folks. The only certain thing about the market is its uncertainty. Especially with this Israel-Hezbollah situation throwing fuel on the fire, trying to predict the market's every move is like trying to catch lightning in a bottle. That's why diversification is non-negotiable. It's your financial seatbelt, your investment airbag. Don't put all your faith in one hot stock, one promising sector, or even one asset class. Think of your portfolio like a gourmet meal. You need a balance of flavors and textures to make it satisfying. The key is to find the right mix for your risk tolerance and financial goals. Section 8. Managing risk, protecting your portfolio from shocks. Investing during geopolitical turmoil isn't just about picking the right stocks. It's about protecting yourself from the inevitable bumps in the road. Think of it like this. You wouldn't drive without car insurance, right? So why invest without a solid risk management plan? Set stop-loss orders. These are like safety nets for your investments. They automatically sell a stock if it falls below a certain price, limiting your potential losses. Rebalance regularly. Over time, your portfolio's asset allocation will drift as some investments outperform others. Keep some cash on hand. Having a cash cushion gives you flexibility to buy dips in the market or cover unexpected expenses. It's about understanding your risk tolerance, taking calculated risks, and protecting yourself from catastrophic losses. Section 9. Staying calm and investing smart, your action plan for geopolitical storms. The world's a crazy place, no doubt about it. Geopolitical events can send shockwaves through the financial markets, creating uncertainty and volatility. But that doesn't mean you should bury your head in the sand. Or worse, make rash investment decisions based on fear. Panic selling can lead to significant losses. Now's the time to be informed, proactive, and dare I say, excited about the opportunities that turmoil creates. Market downturns can present unique buying opportunities. Stay informed. Don't rely on sensationalized headlines. Seek out reliable sources and stay updated on global events and their potential impact on the markets. Review your portfolio. Does your current asset allocation still align with your risk tolerance and financial goals? If not, rebalance accordingly. Diversification is key. Consider your options. Explore investments that tend to perform well during uncertainty, such as defense, energy, and gold. These sectors often provide stability when other areas are volatile. Think long-term. Don't let short-term market fluctuations distract you from your long-term investment goals. Stay focused on your financial plan. By staying calm, thinking strategically, and following these guidelines, you'll be well positioned to navigate even the most turbulent markets and come out ahead in the long run. Remember, patience and informed decisions are your best allies.